Hello, everybody. I'm very happy to be here. The Crypto Assets Conference already has a very strong tradition in the German crypto space. Last year, we were in the fortunate situation to announce the first tokenized security token offering in Germany. And as we've already seen in the previous presentations, of course, a lot has happened since then, both on the regulatory side as well as on the side of technology development and application development. And today, what I would like to show you is how we look at tokenization from the perspective of banks in their capital markets business, both from a functional as well as from a market perspective, as well as from a product perspective. First of all, why are tokenized securities relevant in the context of capital markets? In our view, the reason for that is that asset settlement is relatively slow and inefficient. If you register and issue a new security, for example, if you don't have an account directly with the CSD, with the Central Securities Depository, then this process can take several weeks. And sometimes you want to conduct transactions rather quickly and not wait for intermediaries until you can actually issue the security. Then secondary transfers can be quite difficult, simply because if you have to especially do a cross-border transaction, which needs to be booked out of one CSD and booked into another, this can also take several weeks, although actually everything is already electronic. And then also the regular settlement, which is not a cross-border settlement, for example. Typically settlement times are T+2. With less liquid instruments, it's even longer. And this creates huge inefficiencies and even ties up regulatory capital, because if you're an institution and you have to wait several days until a transaction settles, then you have to account for the counterparty risk that you have. And so these are some of the reasons why a more efficient, a faster settlement is something that a lot of capital markets participants really care about. Now, when you bring in tokenization, it's a huge step forward. And I like to compare that with changing from regular physical post to email. All of a sudden, you can send messages independently of where the recipient is, what kind of technologies they use, because we all agreed that we're using one common protocol in order to exchange communication with each other. When you tokenize securities, something similar happens. Although most of the securities today already exist in electronic form, the settlement process still pretends as if there was a paper certificate somewhere down the value chain. And if you tokenize that, then all of a sudden you have an instrument that you can transfer very easily, and that is compatible to many, many other market participants. So again, the comparison to email, in my view, is something that's quite useful here. Now, the reasons that banks and capital markets participants care about that is not just the settlement efficiency that I've just shown, which is one of the most obvious reasons to care about that, but also cost reduction is another aspect. Even though the technology, of course, doesn't come for free, when you look at the back office processes that happen when you settle trades, then you will find out that you actually remove quite a lot of friction from the process, and a lot of back office admin tasks completely disappear. And then one other important aspect, of course, is customer retention. On the one hand, if you look at retail customers, many retail customers today already have been in touch with digital assets through cryptocurrencies like Bitcoin and others, and they expect typically their banks to also provide them with solutions here, although today there aren't many solutions, which means that many retail customers, for example, use retail type of wallets on their phones and do self-custody, or they use the big exchanges, the cryptocurrency exchanges, where they buy digital assets. And I think that if banks don't start to provide these customers with solutions for custody, for trading, then it might happen that even for securities businesses, once they become tokenized, these customers won't be doing this business with their banks anymore. So I think it's a very important moment for banks to start providing solutions, starting with custody and trading, to their retail clients. And when you look at the institutional side of the business, when we talk to larger asset managers, it's relatively obvious to them that over time, a lot of the assets that they are investing in today will still remain the same types of assets from the same types of names. However, they will come in tokenized form. And so asset managers and other institutional investors also expect their banks to provide them with solutions so they can invest into these types of digital assets. We've already heard a lot about regulation today, so I don't want to elaborate too much about that. Obviously, there's the digital or electronic securities draft legislation in Germany. There's a lot of regulatory activities happening on EU level by the European Commission. So all of that is, of course, supporting the acceleration of tokenization of capital markets. And on the other hand, we can already see today, based on certain studies, like one that came out by Fidelity quite recently, that a lot of institutional investors have already touched digital assets. Again, just like in the retail space, in many cases through the context of cryptocurrencies, but they also expect that securities and traditional assets like bonds and equities will come in tokenized form in the short term. Now, how does Bitbond come into play in that context? At Bitbond, we are a technology company and we provide software primarily to regulated financial institutions so that they can take advantage of tokenization and of digital assets. And we provide our tech in 3 different modules. They are obviously working together, but you can even use each of these modules separately. The first one is digital asset custody technology. We at Bitbond, we're not a custodian ourselves, but we provide the technology to banks and other regulated institutions so that they can provide custody services to their customers and clients. And that's typically the first starting point, because if you don't have a custody solution, it's very hard to sell digital assets and to conduct business with digital assets. And the second module is the asset tokenization itself. It's the minting of tokens that represent a security or other assets, and also the lifecycle management around that. So from the very beginning of an issuance, which includes investor onboarding, KYC, and even client suitability assessment in some cases, then after that comes the tokenization, and after the tokenization comes the post-trade part, which includes a lot of reporting requirements around tax reporting. If you speak about funds, for example, then NAV reportings, and this is all part of the solution. And then the third component is on-chain payments. So in some cases, digital securities are still settled with conventional payment methods, but in some cases, there's a digital euro, a digital dollar that exists on the same chain that will be used for settlement. And this is actually the point where you can leverage all of the efficiency gains that come from tokenization, because when you have a digital payment method, you have an instant delivery versus payment mechanism, and you connect these 2 transactions into one. Right now, of course, everybody is looking at central bank digital currencies. I believe it's going to take a couple of more years until we will see the ECB and other major central banks issue CBDCs. But in the meantime, I think that commercial banks will be doing something. And we actually have a pending announcement here where a bank will be using our technology in order to issue their digital euro. Here are a few screenshots how the solution looks like from a user's perspective. So first of all, there's the perspective of a bank or of the arranger. There is an admin panel, as we call it, or a tokenization tool, where they can see all the orders of an issuance coming in. So even the order book management, you do that digitally. You don't have a spreadsheet for that anymore. And then with a click of a button, you can run the allocation if the issuance is oversubscribed. And then you click tokenize, the tokens are minted, and then directly distributed into the wallets of the investors. And then, of course, there's the investor perspective. On the one hand, many banks have investor onboarding already for existing products, of course, so they can use that. Or we can provide them with a white label front end where investors can create a new account, register as an investor, and have their wallet as a white label solution directly integrated into that. And here they can store tokenized securities, cryptocurrencies, and in some cases we even include secondary trading opportunities. 2 examples how we utilize that. Bankhaus von der Heydt is one of our clients. We will also do a presentation together on Saturday. They are a bank that primarily focuses on securitization. And one of their main reasons to replace the existing process with our technology was to speed up securitizations. Normally, it would take them around about 8 weeks for the whole process. when they don't need the central securities depository anymore, they do that through tokenization, and they become their own paying agent with our technology, then all of a sudden this happens within 1 or 2 days. So it's a huge step forward in terms of time to market for them. One other example is a platform called ClickOwn, where you can invest into tokenized real estate, and the entire technology behind that platform, from investor onboarding, over custody, over token minting, is also provided by Bitbond, and everything happens on a white label basis. So in summary, what we provide in the context of capital markets is an end-to-end tokenization solution that includes investor onboarding, tokenization, post-trade, and custody. And this is the case for several types of assets. So it's bonds, it's equities. We're looking at certificates, funds. So these are the types of assets that would usually be conducted here. One very important topic is that we focus on clients that are regulated themselves, because when they work with a technology partner like us, they have to make sure that the technology provider is compliant with regulations around outsourcing and around IT security, data privacy, and all of that is coming from regulations such as BAIT and MRISC. And we follow all those regulations in order to be able to work together with regulated entities. And the software comes as a white label software as a service solution. So you could compare it to a core banking system. Of course, it has a different functional scope, but a customer who logs into his online banking account, for example, would never know what is the core banking provider behind that the bank is working together with. And it's similar here. The end customer will typically not see that it's Bitbond technology under the hood. And of course, we already have several regulated clients, such as Standard Chartered or Bankhaus Vonderheit, where we have already gone through these onboarding processes also from a regulatory standpoint, and where we have rolled out these technologies into production that I've previously showed. That's all I wanted to show to you today, so thanks a lot for being here and for being online. I hope we're going to have great discussions afterwards, and again, thank you and have a great day.